trading is not all about technical analysis. It's about the psychology surrounding everything that you're involving yourself with in the market and in your personal life. And I'm going to show you how I applied that.
Roughly about $1,000 today. Not too bad. I'm going to take profit from this trade.
Okay, so in today's video breakdown, I'm going to go over just a learning curve that I had in the market. As always, I'm very transparent with you all about my losses, my wins. I told you guys that I haven't been too active in the forex markets recently. I've been making sure that I only trade anywhere between once to twice per week max. Very limited, right? For example, in March, showed you guys that I made 8% the first week of March, so I didn't trade the rest of March. We're now going on the second week of April, and so far up 4%. Took a loss yesterday of 1%. And so now I'm at a decision point, right? Do I continue to trade after having made 4% for the month of April? Do I secure that profit and start to pull that money out of the market and then diversify it into other assets like buying gold, silver, crypto, things of that nature? Or do I keep it in my trading portfolio and attempt to gain more of a percentage, in a sense, not handling my greed properly? And that's what we're going to go into in today's video breakdown. All in all, again, this is me just making time up since tomorrow's my birthday to you all. I know that we have the weekly Zoom, and I told you guys that I'm going to be rescheduling it just because I know that there's some individuals that are going to want to come and do things and whatnot for the birthday. So we're going to go over all that today. I'm going to show you guys where I messed up, how I realized that I messed up, and then how we were able to today scale down, and multiple other students today, which was absolutely phenomenal to see, caught this trade in the GBP/JPY chat. And I'll show you guys examples of that as well. So I'll explain to you guys why it was that I was selling here. Again, trying and attempting to be transparent with you guys, telling you all that I personally need to focus on selling the market better, especially in the FX industry. Okay, I don't really sell crypto. More so if I'm building a day trading portfolio around crypto, it's strictly buys. But the FX markets rapidly move up and down every single day. And so to limit yourself, because you can't analyze the market properly for both buys and sells, and the amount of capital that you can make if you did is not an excuse. All right. This is, again, just me attempting to continue to strive for perfection in this market, although, being perfect in this market is not attainable. Learning from your mistakes, being able to react to the market and fix, easily fixable mistakes just by understanding the higher time frame, moving in tandem with that order flow and whatnot, and things that we're going to go over in today's video breakdown. So I'm going to be dropping this on the YouTube channel just to show the space that we're transparent. I like to be transparent with you guys, really hopefully teaching you a lesson, not only in the form of psychology, but in the form of technical analysis and how to react to the market. Little tiny gems, right? So we're going to start here. I posted this to you guys on Twitter, and I said a gem that I dropped in the new book, Forever Efficient, will stick with you throughout your entire life. And I'm going to show you how this week I physically used something that I talk about in the book to show you guys that I actually apply the information that I'm attempting to provide, right? So on page 48 in the book, Forever Efficient, I wrote, no matter how your past self would have looked at a specific outcome, good or bad, a bad outcome can still be positive because you can learn from anything negative in your life. Learning and gaining knowledge should always be looked at as a positive gain, even if it was from a negative event, right? So in my trading, at the beginning of the week on Tuesday, analyzed what I did incorrect after having risked a certain accepted amount of money that I was willing to risk, which I showed you guys was 1%. Right? This trade right here, I even explained to you guys in the chat. I took it. It went about 30 pips in profit, right? Even when I sent you guys the analysis here, I mentioned to you all that the trade was 30 pips in profit in the GJ chat and said, if you guys want to move your stops to break even, now would be the time to do that, right? So anybody that secured profit and moved their stops to break even committed themselves to a 30 pip trade. I, however, moved my stops to break even, but I did not close the trade. So I said to you guys right here, here's the entry right here. I said high risk trade because higher time frame buyers are currently in control. So I analyzed that higher time frame buyers could potentially still be in control and want to push the market higher. We'll go to the higher time frame in just 1 second. And I told you guys my entry here is at 166.085 for the first entry, right? And I sent you guys the analysis. This is what I was expecting for the market to come down and grab this trend line liquidity that I was seeing set up. We'll go over the analysis in just 1 second, all right? Overall, I want to try and get you guys to see my mindset, because trading is not all about technical analysis. It's about the psychology surrounding everything that you're involving yourself with in the market and in your personal life. And I'm going to show you how I applied that. Okay. So worst case scenario, I told you guys 1%, still up 4% for the week. And then boom, right here, I said trade was 29 pips in profit and I didn't take partials, and my trade got stopped at break even, right? So that was the first position. Second position, I told you guys again, high risk trade, because higher time frame buyers are still currently in control, risking 1% again. I was seeing a retracement here right before New York session, Asian session rollover, right here in this area when the market resets itself. And I was thinking again, based off the higher time frame analysis I'm going to show you guys, that the market was potentially going to dump back down into these psych levels to clear out the liquidity here. Okay. I was thinking maybe in this area, because they grabbed the highs here and here, maybe it was going to be time for them to sell and grab the liquidity at the lows. However, I also said to you guys, key takeaways right here. This is where I'm going to show you guys my entire mentality and how I've become a successful trader, because I don't allow negative events in the market to impact me negatively. I take something positive away from them, and that's allowed me to progress. That is a little gem. And I'm telling you all, if you do not have the mental ability to do that, and instead you beat yourself up, you blame the market, you say that you're not good enough, you doubt yourself, you're not going to be successful. You're not going to move forward. So watch what I did. Key takeaways. Don't trade against the higher time frame momentum. That's the first thing, because as you saw, every single analysis I gave you guys, right? I told you guys higher time frame buyers are in control. So pay attention to that. 4 hour was bullish, 1 hour was bullish, 15-minute was bullish, all creating higher highs and higher lows. I was selling based off an assumption. I was assuming that because they grabbed the highs, the market was then going to reverse during the New York Asia session rollover and tank to come and grab the trendline liquidity that they left behind, because I was assuming that this was in an area that they were going to want to attack after attacking a high. Again, assuming, not trading with what the market was telling me. Do you guys see how that is a mental error on my part? That is not a misanalysis. That is a mental error. I was forcing my analysis on the market. That is a mental, like, I don't want to call it a mental disorder, but that it is. That's what it is. I was thinking based off an assumption, not what the market was telling me, based off of assuming that the market was going to dump. Therefore, I was forcing my analysis on the market, not actually allowing the market to speak to me. Okay. I was chasing the market. I was impulsively trading. Do you guys see all of the psychological things that are unfolding as the technical analysis is explained to you, right? Okay. So I analyzed that. Now let's go to the higher time frame and break this down for you. So we're going to start from the hourly, and then we're going to go down. All right. And I'm going to show you guys. Okay. Back when I was selling here, this is what I was seeing on the higher time frame. I was thinking that the market makers, I explained this to you guys in a Zoom call the day that I was selling. I said, if the market makers are going to dump again, right? And this is a bearish leg or a bearish break in structure where this whole entire bearish leg consumed all of the buyers in this area, breaking this low here, right? And this is a new low in the market. Then in order for them to create a lower high in the market that would send price down, this would be the area most likely where they would sell from if this is a pattern that comes into fruition. And here in this area, I was assuming that that was going to be the case. I was guessing the market direction, and I was looking for that, right? It didn't happen. It didn't work. Instead of forcing my analysis on the market, what I should have done is analyzed that this whole entire price action move was, or could have been potentially, a sweep of liquidity, because at the time I didn't know that. But what I could have done is said to myself, okay, well, this is all trend line liquidity here. this market structure over here to the left-hand side was all broken. Maybe this leg right here is just a pullback to come and clear out all the money in this area to then send price higher, right? Instead of thinking of this as a move to sell. Do you see what I'm saying? Okay. So I was thinking of this whole entire bullish move of a move for them to sell instead of realizing that it was a move for them to push price higher, just like they did, right? They pushed price higher. They made a new high, a new higher time frame high, because if we went to the 4-hour, you guys can now see the candlesticks on the 4-hour have closed above the previous. Okay. So paying attention to higher time frame is key to your success in this market. And I was failing to analyze that properly. Instead, I was forcing my analysis on the market. So the learning curve that I had and how I was able to catch the trade today was seeing, based off of past price action, this significant area. And this is where we're going to go into the notes that I have here for you guys. So we went over just now understanding higher time frame. Higher time frame structure takes precedence. Okay. If you're trading against the higher time frame, 90% of the time you're going to lose, unless, like how I had that opportunity in the first trade to, once I was in 30 pips profit, move my stops to break even and take partials. I did the first step right, move my stops to break even, but I got greedy and I didn't take any partials. So I let the market rob me of the first trade. Then I got even greedier and thought to myself again, maybe I can catch the market rollover, dump down into lows. Ain't wrong. The market wasn't done figuring out where the market makers really wanted to sell from. Okay. So what do they have to do? They have to drive price higher. In order for them to do that, they have to create structure. They have to create higher lows so that they can buy at a discount, right? Pay attention to what I teach you guys, because this is going to come in an important role as to how we caught this trade. And then they like to buy at a discount from where they previously bought from in the past, right? So how do we identify that? Okay. So now here's how I flipped the script and how the majority of us, as you saw in the chat, most likely caught this trade today. We had freaking Justin catch the trade, myself catch the trade, Lisette catch the trade, right? There was probably even more. I didn't even look in the chat of how many people caught the trade. All I saw was buys this morning on GJ, right? So how did we all look? Here's all the buys. People have been buying GJ pretty much all week. Okay. Here's the buys from today, right? So we all had to have come to some conclusion. And that conclusion is the CYPRX confluences, which I'm sure we were all seeing in this area. So now let's focus in on psych levels and identifying where banks bought from in the past, not forcing our analysis on the market, understanding based off the 4-hour analysis that we just made and the 1-hour analysis that we just made, the higher time frame was bullish. Okay. Let's go down to the 15-minute. So 15-minute, what I was seeing in order to trade today was that the banks yesterday during Wednesday's trading session, again, New York session, where did they operate at? If we jump down to the lower time frame, so pay attention to where New York session bought from the previous day. We're focusing in on the day that I sold, right? Let's get rid of some more of these arrows. Let's get rid of these. This is where I sold from. You guys have seen that. All right. Let's jump in again, paying attention to detail as to what I attempt to teach you guys. The banks like to buy, highlighting from the candlestick bodies down to the wicks from where they bought from previous areas in the past, right? But you guys can see this New York session, what did they do? They got past price action at a high, right? Why? Because prior to the session, look at where they bought from before, all the way down here. Again, we highlighted that area, right? They got past price action at a high. They're not going to buy at a high. They're going to dump price down into an area of discount where they bought from before and then buy. And boom, what do the market makers do? Again, manipulation window, pay attention to time in the market. This is important. Why do I attempt to teach you guys to avoid this window right here? Teaching you all to sit on your hands and not touch the market here. Look at the manipulation that you could have avoided. First of all, there's 2 areas of retail investors here in this area. Okay. And if you can't see them, then most likely you're the retail investor that's getting liquidated based off of these stupid little, I don't even know, imaginary patterns in the market. Okay. Here, you can imagine that prior to the New York session, Retail traders on the lower time frame were doing what underneath of these lows? Look at this. It's so clear. It's not even funny. Right? In the manipulation window, again, that I teach you guys to avoid, don't trade this. This is why. Because this is where impulsive retail traders are trying to guess the direction of the market, and they're just facilitating orders above highs and beneath lows. And the market makers know all that. They're the ones manipulating the price action in order for them to set up retail money underneath of those highs, underneath of those, or I won't just call it retail, because it's not just retail. It's less informed hedge funds. It's less informed banks. It's who's ever in control of this market being smarter than the rest of the market participants. That's who's doing it, right? So look at this, okay? In that manipulation window, we see beneath lows. What do we see?
Buyers, trend line.
Yeah, early buyers, right? Early buyers attempting to guess the direction of the market, right? Also people that are placing sell stops beneath these lows. There's two types of orders: buy orders and sell stop orders, from people that are willing to sell if price drops beneath these lows with a stop loss above highs, and from people that are facilitating market executional orders or buy limits or buy stops. And then also in the same window, what do we see? We see people, again, attempting to sell from some type of trend line that comes into this area, right? Or however retail traders are drawing it, okay? They just pick highs and then attach a line and think that the market has to respect that. So most likely above these, these highs, we were seeing orders here, sells, and then people placing buy stops above these highs, selling here, selling here. That's now a triple touch of a trend line. They ran the liquidity above highs and dumped the market down into an area of interest. Again, this gray box where they bought from in the past. Here's a New York session buy. Boom, right? Now, what I want you to focus in on, this is what really gave me the confidence to take the trade today. Let's delete all the arrows and focus on the second blue note that I had for you guys. And that is, zoom out, identifying and paying attention to psych levels, right? So let's zoom back into that area. All right. Now, what I noticed about the previous day where they bought from, what's significant about this 500 level? It's one of the what? The majors. Understanding the difference between the major and the minor psych levels, specifically on GBP JPY, is one of the most clutch things that anybody can understand about this. Because if a major is taking precedence in the form of banking institutions or whoever's in control of this market buying at the specific level, then it plays such a more important and crucial role in your technical analysis, okay? In your thesis that if this holds, this psych level, this major, most likely based off of history, price goes parabolic, right? Or it goes for a run to another major psych level, right? So here you guys can see that 500 psych level coming into play. Well, guess what happened? The market makers, they bought from that 500 level and they pushed it up into another major. You guys can see it literally went from one major to another major. There's another 500 push right there. Boom. So this whole entire price leg, boom, all the way up to the 500. Then they sold again. Where they sell back down into, boom, back down into a major, another 500 to the T. So right here, again, creating the pattern that they create to know that the banking institutions are in control of the market. Now, this is what I attempt to teach you guys to pay close attention to. They have to make this pattern. They have to manipulate a low if they're going to buy. Once that low is manipulated, the pattern that needs to come next is a bullish match of momentum and a hold above the major psychological level, right? Watch how strategic this is if you're still here listening, okay? Because today, they made the same exact pattern, which is going to solidify how we were able to all capitalize on these buy positions. I mean, screenshot after screenshot. If this is not proof in the pudding, that what we're showing you is magical. I'm telling you, it's insane. But when you understand the psychology behind it and the timing behind it, it solidifies everything, right? Okay, so what I'm not going to show you guys right now because I'm going to upload this to YouTube, but think about CYPRX 3.0 and the time efficiency paradigm that I teach you guys. Go back and pay attention to the time in the market that all of this happens, and it's going to blow your mind, right? If you haven't already finished the CYPRX 3.0 content, get on it, guys and gals. I'm telling you right now, okay? So here we see a low, a run on that low, and then a failure swing low after that. Boom, that is a sign that the market makers have no further interest in pushing price down here in this area to grab liquidity. You have to say to yourself, if they did, what pattern would they have made? They would have made lower highs in comparison to the previous one, and they would have tanked price. They failed to do that, and instead showed you, based off of where they bought from in the past, respecting major psychological levels, based off of manipulating a low, creating failure swing low. And then the craziest part about all this is look what they do. They start to show you signs in the form of structure. Here's equal highs, where they do what? Set up liquidity above the market, set, sweep, go, right? So what are they doing? They're setting a trap. They're sweeping that trap with this low, and then they go. Then they do it again. Set, sweep. What do? Here's more money under lows. They set a trap. They sweep liquidity, and then they go. And they continue to do that until it's time to reverse. And where do they reverse at? Again, a major psychological level, moving it over now, 500. So I saw all of that they have now bought from this major psychological level and created that pattern, not only once, but now twice. So look at what we did today, all right? So now today, right here in this general vicinity where I showed you guys that I was selling, all I was thinking to myself is this 600 major level is the medium of exchange. Okay, so pay attention. Now let's try and go to the higher time frame and clear some things up so I can teach you guys about the medium of exchange and why I was able to catch this sell position. Okay, think of this, by the way. Let's throw this in there. This whole entire arrow right here represents my knowledge curve. We had a loss here. We had a break-even trade and then a loss. Okay, what did we do in order to transition our mindset and our brain and our analysis to scale into these buy positions? Okay, so the positions from today were a sell here in this area at the 166.00 major psychological level, because what I noticed about this range, if you want to call it, or this necessarily large impulsive sideways movement on GJ, because that's what it's doing right now. It's moving to the upside impulsively, to the downside impulsively, to the upside impulsively, but staying around this 500 psychological level. So the market makers are interested in that. And every time it's broken this 500 level, it's dumped straight back down into the 500 level. But what I noticed is in between this range, we have another major. And every single time the market, let's go to dark night, right? Every single time the market consolidates around this range and holds at the 600 level or the 6600 level, it breaks to the upside of the range. Same thing here. It closes underneath of it, breaks to the downside. Same thing here. You guys can see the 600 level right here is the medium of exchange, right? You see the friction here. Then it breaks back to the upside. So this friction zone right here is at the 600 level. I keep calling it the 600 level, the 600 level. Same thing here, medium of exchange. Same thing here. Right? So when I caught that sell today, I understood that if we break underneath of the 66.00 psych level, most likely what were we going to do? We were going to dump down into the 500 so that they can buy. And that's all the analysis that I took was for this sell position, stops above a what? A lower high. Why? Because if the analysis is incorrect, where are the market makers going to show me that they want to target? Why did I place my stops here? Let's think about that, right? Because I want you guys to have fine detail in your trading. Because logically speaking, again, we're on the 3-minute chart. If the market makers were not going to continue this sell pressure down, what did they need to show me they wanted to do? They needed to show me that they wanted to run highs. So I put my stop loss above a high, only risking 1%, right? So boom, market dumped. We caught the sell down into 500. Now this is where we're going to pay attention, because this is where the majority of the CYPRX students came in clutch today and bought GJ, like straight up snipers. It was so cool to watch. So let's get rid of all this. Let's get rid of this medium of exchange gibberish, right? Understanding structure easily and simply. It's not anything that's advanced. It's just literally understanding how the market moves in the form of psychological levels. So now to continue what we did from Tuesday into Wednesday, we highlighted from the candlestick bodies. Let's go to the 5-minute. We highlighted from the candlestick bodies down to the wick from where this New York session bought from and extended that over to the right-hand side. That we can see again, boom. Asia session, London session sold, New York session sold, so that again, they could buy. Remember, the banking institutions all work together, all right? You think that they're not friends, they're friends. Trust and believe. Look up the Tower of Basel. Go read that book, okay? I've told you guys always, somehow, shape, or form, New York needs to profit. It doesn't matter whether they run highs or run lows, they need to profit or buy from a discount where they bought from before to run highs, or sell from a premium where they sold from the day before. New York's the one, okay? Financial capital of the world. This New York session, if we do the same thing that we did this day, which is, again, let's delete this now that we're moving on to the next day. All today, what did price action look like when the market opened? Let's replay, because this is the analysis that every CYPRX student today would have had. Well, coming into the market, you can see from the 4-hour down to the hourly, we are bullish, right? The market's creating higher highs, higher lows, higher highs, higher lows. This is the previous day's price action, right? Look at this. What is this? This is structure, okay? From this New York session low to this London session high, the market, let's get rid of this, has broken all of this market structure. So again, on the higher time frame, the same liquidity traps that we saw in the lower time frame, the market makers setting traps, okay, sweeping lows before they do it, set, sweep, go. It's the same thing on the lower time frame, right? We were able to see that today, highlighting again, now we're on the hourly chart, from the candlestick bodies down to the wick, and extending that over, you now have your area of interest where you could be a buyer from, based off the ideology that if the market makers are going to buy from again, where are they most likely going to want to buy from? At lows where previous sessions bought from. So that gives you a range of areas to choose from. The lowest area or the best discount would be New York session lows. The next would be Asia session lows. And then after that, the London session lows. But think about the market makers. Number one, they're greedy, profit-making animals. They cannot lose, right? They can't lose. So think about this. Where does liquidity rest in the market? From people chasing the market. Remember, market makers buy at lows, okay? Everybody else chases what the market makers are doing by buying here, buying here. I'm not saying that the market makers aren't buying orders, okay? But the majority of uninformed traders exist in this area. The market makers, because the market makers on the daily and the weekly are the ones making these price swings, right? They're the ones with the amount of money to pump into the market here at these lows. So with that knowledge and information, when this New York session opened, as CYPRX traders, dang it, I hit the candle. What do I attempt to teach you guys? Now think about this in detail. Number one, we do not buy at highs. Why? If you're looking to trade this New York session, let's get rid of all this. I really want you guys to think about how logically we trade the markets here at CYPRX. If we're on the hourly time frame and the previous New York session bought down here, and you're about to trade New York session, why on earth would you buy here? Like, I'm being honest, just logically ask yourself that question, right? And you'll come to the conclusion, I wouldn't. Why would I want to buy here if the market makers yesterday and the day before yesterday all bought from down here, right? You guys can see with your session indicators, boom, New York session bought. You confirm it, boom, New York session bought. I'm in another New York session, and they're getting past price action at a high. So let me set myself some alarms. Let me dial in and see when these retail traps were created in the market. Look at this. It's just so interestingly enough that every single session during the manipulation window, that is where those lows were created. We can go turn on our manipulation box. I know that Dom has created a widget for you guys on TradingView, or an indicator on TradingView that you guys, I called it a widget because it's a widget on the phone. A indicator for you guys on TradingView that automatically puts this on for you. So you don't have to draw it on like me. But remember, I don't do my analysis on TradingView. I can't stand TradingView. Too many freaking colors and buttons. It's so distracting. I love MetaTrader. MetaTrader is so much easier, right? But it sucks doing an analysis on MetaTrader on the computer, right? So look at this higher time frame. Remember, these arrows came from the higher time frame, right? Okay. Now dialed in, we see lows that were manipulated during manipulation windows, where most likely retail is chasing the market, Bank and institutions, the big whales, are buying from down here. Okay. So anybody with the right mind during today's New York session, and anybody that has studied the 2.0 content, anybody that has studied the 3.0 content, and anybody that has studied the advanced content, going over psychological levels, how to define areas of interest, look at how swiftly and easily this just flows like butter straight down into where they bought from the day before. Remember, we caught that sell at the intermediary, right? But now let's jump in to get our list. Let's fully get our list of CYPRX confluences. Number one, we're trading with the higher time frame bias. Every single time that the market makers have bought from the 165.500, they've bought, right? Twice. So we're going to have that in our analysis, right? Now, we have also the previous day, specifically dialing in on the 15 and 10-minute chart. So now we have an area of interest that the market has come into. All you had to do was go down to the minutes chart and say to yourself, okay, what do we go over in the course material? If the market does not push beneath a major psychological level, and it's done this already in the past multiple times, so you're not only using past price action information, but you're using logical market information. You know that if the market, specifically on GJ, doesn't push below a major, then where are the market makers going to want to push it? Up into another major. They're not going to want to just leave it there, right? Okay. Imagine if they just left price somewhere. It would just look like a dead straight line. It would have no heartbeat. Okay. The market cannot have no heartbeat. So when it comes into these major psych levels, you have to imagine that there is going to be another big impulsive move. And it's either going to be a downside move or an upside move. If it just moves sideways, again, it's just going to be consolidating, right? We're on the 1-minute chart. It's not on the 1-minute chart going to stay like that for forever. So you know that a major decision is about to happen in the market, okay? And when you know that, and you also know the pattern that we pay attention to, which is if they're going to buy, they need to create a low. They need to violate that low and show us bullish momentum and bullish order flow by creating bullish structure, which is a sweep of a low, a move that shows us a higher high in the market, and a higher low that leads to a bullish continuation to confirm that momentum. Do you see? And then once that pattern has happened, we can go in and say, if this trend is going to continue, it's going to need to make a series of higher highs, and higher lows. Well, guess what we can do? We can get in on those positions simply by knowing a couple of different things. And that's what we all did today. It was so beautiful to watch play out. Check how this price action just literally, it's like slicing through butter. It's so beautiful when it plays out, okay? So remember, we're now on the 1-minute chart. This blue box right here, we got from the 15-minute chart. Previous day, area of interest from the candlestick bodies down to the wick and extending that over, right? 1 minute. Market dumped straight into that. 500 psych level. Now let's play some price action out. Let's get rid of that so you guys can see. All right. So boom, right here, we see the same exact pattern that they make on the higher time frame, which is a low, a wick that violates the low, whether you want to look at it as this low or this low, you can still see the pattern, okay? And then a failure, swing low. So again, if the market or wanted to go below the 500 level, it would have needed to do what? Create higher highs, higher lows, and then break beneath it. Or continuational lower highs and lower lows and retest it underneath of it like that. That's the only two things it could have done to go lower, right? Or just melt like butter straight all the way down through, but it didn't do that. It stopped, okay? When it stopped, what did it tell you? It told you, we don't want to go down anymore. Here's the higher low that comes in and sends price higher, equaling out all of this bearish momentum with bullish momentum, right? So simply, as CYPRX traders, all we did was we saw that. I then witnessed this break of structure right here, right? So we see another higher low come in, and then boom, the market continues breaking all of this structure. So simply, as soon as that happened, I drew my fib from the low to the high, and I just waited for price to come back down in to this area of interest. And when it came down, we bought, and everybody was following this move today. It was absolutely phenomenal, right? And now the market has done what? It's broken all the way back up into the 166.00. That's where I closed my trade out this morning, right? So that was a phenomenal trade today. In my personal opinion, a good learning curve this week. Again, trading is not all about like, and I'm not even throwing in right now any fundamental analysis, any market news articles that I read. We had massive fundamentals come out this week. We even had Andrew Bailey speaking this week. Okay, we had U.S. fundamentals coming out this week. So there were a lot of major other factors to take into consideration, right? It's not just your psych. It's not just your technical analysis. It's everything combined. But what I'm attempting to show you guys is that you can improve in your trading just simply by understanding a few things about the market, being able to react to the market, understanding that in the past or something that you've done was impulsive trading, understanding how to correct that by trading with the higher time frame and being patient and waiting for the market to come to you. Do you guys see here? Okay, I just want to show you. Do you guys see here how in this area, this is how I'm going to end the Zoom call? Because I hopefully, if what I am about to say, you guys, it really clicks with you, then you're going to turn numbers in this market, in my personal opinion. Because when you can really form an idea around why you've lost and then understand and fix it, that's what makes someone successful. And that's a fact, okay? Going back to what I wrote to you guys in my book, right? So here, I was assuming that the market was going to sell from here, just off of an assumption. The market didn't tell me that yet. You get me? It didn't give me a break of structure on the higher time frame and then pull back yet. It did none of that. So I was trading an analysis that I created without letting the market tell me what it wants to do. Okay. Here in this area, instead, I was, excuse me, I was actually analyzing what the market was telling me. The market is creating higher highs and higher lows. Here you can see that. Higher low right here. That leads to a higher high. We again, from New York session to New York session, created a higher low. So this is structure. Boom. Right? Then from this New York session to this New York session, we again created another bullish leg. So in this analysis right here, buying from this area, right? Everybody today, in my personal opinion, again, saw that this was the potential higher low. And to solidify that this was a good area to buy from, again, remember we're on the 15-minute time frame. We could even go to the hourly. You could have done what? To solidify your higher time frame analysis, which is not what I was doing yesterday. You could have taken your fib from the low on the hourly to the high and said to yourself, okay, boom. They could be buying from an hourly discount, right? You guys see that? Okay. So over the past couple of days, just correcting myself, ending the week on a positive note, right? Today's Thursday. You guys know we don't trade Fridays. So all in all, right? Like I said, 4% up for the month. I have a decision to make. Do I continue to trade, or am I satisfied with that 4%, which is a decent chunk of change for myself? Okay. You have to pay attention to detail. You have to understand that the market is not here to be your friend. It is here to rob you of your money, and that is its only job, and teach you lessons. It's going to teach you unconditional lessons, left, right, left, right. Anybody that thinks that this market's not going to teach them a lesson will never become successful. Straight up. You have to understand what this market is. It is a big, massive lesson learning ploy, not only within yourself, your personal life, your finances. It's going to make you more awake and aware, hopefully, to what's really going on in the world, shifts in the market. Okay. No indicator, no signals, no guru is going to make you successful in the market. Real superior traders know there is no substitute for time and experience in the market. I'll leave you guys with that. That is a fire gem right there, right? No indicator, no guru, no signal is going to make you successful in this market. Just straight time and experience. Learning from those lessons, taking those L's, and moving on from them. I'll see you guys next week. Hope you guys had a good week.